Good morning, everybody, and welcome to CFO Coffee Talk, brought to you by the Florida CFO Group. This morning, we're talking CFOs and venture capital with two of the smartest people I know. One of them is my Florida CFO Group partner, Deane Barron. Good morning, Deane.
Good morning, Phil.
And the reason I know you're smart is that you've been on a few of these shows saying wise things, but also you're smart enough to be out of harm's way up there in Toronto, letting the hurricanes pass through. I hope your return next week doesn't have any surprises left by Adalia.
Me as well.
And the other super smart person on the show this morning is Chiu. Kathy and I go back 10 years. Before I met her, she accumulated a couple MIT engineering degrees and a Stanford MBA and some venture capital experience. And in the 10 short years I've known her, she co-founded and became managing partner of one of Florida's premier venture capital firms, DeepWork Capital. And by the way, she also has done improv, stand-up comedy, co-written some fiction, did some painting. Kathy, you're a Renaissance woman. Thanks for being here this morning.
Oh, shucks, but thank you.
All right. I love to embarrass my guests. Kathy, please tell our audience a little bit about DeepWork Capital.
Sure. So DeepWork started in 2015 when a couple co-founders and I noticed the trend, which is, here in these underinvested market, especially here in Florida, deal flow is getting really good, but the capital availability is not quite. And so we started a little fund to see, how that might play out. And when we did that, it worked out really well. Our very first investment paid back the entire fund, in fact. And so Fund 1 is doing really well. And then in 2018, we started a second fund. And this time we expanded our coverage to life science companies. And that's also going really well. And 3 years later, in 2021, DeepWork won an RFP to become the investment manager of Florida Opportunity Fund, which I'll talk about later. And this year, we now have a third fund. So that's DeepWork. We have 3 private funds investing in early stage venture capital here in the state of Florida. And we're also the investment manager of Florida Opportunity Fund.
And that's a big deal, isn't it? How big is the Florida Opportunity Fund?
It's over 100, and obviously valuation of some of the assets goes up and down, but well over 100.
Oh, very good. Well, congratulations on winning that RFP.
Thank you.
Deane, you've got some experience as a CFO for venture-backed companies. Tell us a little bit about it.
Well, I joined a software company as a startup that had been supported by venture capital. And over 8 years, we grew to 400 million in revenue, did an IPO, and the VCs were able to cash out. I'm currently serving as the CFO of a startup company in additive manufacturing. So got a little bit of experience.
Well, very good. Well, let's start with some CFO perspective, Deane. What does a CFO do to help a tech startup raise capital?
Well, you want to tell the story in an interesting and a compelling way. One thing is to define the market or sub-market in a way that your advantages will enable you to take a leading share over a period of time. When you put the revenue model together, keep it simple. Investors like simple. Use metrics in the story like gross margin and days receivables outstanding. Explain well the fixed asset and research and development investments that you need to make and the payoffs, and also show off the executive team and the industry experience that they have.
No, very good. And I would add, and having worked with about a dozen different tech startups, is make sure you're focusing as much attention on generating traction as you are telling a great story. They sometimes fall in love with telling stories about themselves and disproportionately allocate their energies to the storytelling versus the traction generating. Would you agree, Kathy? What's your perspective?
I would agree.
Yeah. Well, let's talk about when a business owner should consider venture capital.
Sure. I think to answer the question of when, maybe more importantly, is like, should you even? So a lot of times businesses would have a way of bootstrapping or funding themselves by operations. And but because everybody else was raising, they thought they should. And actually, no. Venture capital is expensive compared to some other forms of capital. Your operating cash is the best. You can get customer and revenue even better. But even before that, you should think about, if you're a very, very early stage company, your valuation is hard to peg. VC is going to come in and give you a low valuation because that's what they see right now. There's nothing. You should really consider ways of raising from friends, family, yourself. That's all things that you should be considering before you go to a VC, which will require that you give away too much of your company. Once you got big enough, you may have operating cash flow that allow you to be bankable. And once you're bankable, a debt is usually better if you have the kind of cash flow that can service the debt. VC is really when you think about when you have something that is so innovative, and I know everybody think they're innovative, but now we're talking about something like, a software that once you build it, you can sell $1 gazillion of it, or, a technology, once you get over the goal line, you can, license the heck out of it. So those are the kind of business that are VC fundable, the ones that have the hockey stick. So if you're like a slow and steady, usually the better way is either bankability or your own, bootstrapping mechanism.
I agree. And the one thing I see, Kathy, is their ego gets involved, the tech founder, with how big of a round they can raise, as if that's the end goal. But those of us with some financial savvy and wisdom know that you could be selling yourself cheap. The sports analogy I always give is, if Tom Brady did a 20-year contract when he was an unproven rookie and got his 10 million, he would have left a couple $100 million on the table. Yep. That's how a tech founder should think. Yep. Deane, how much should be raised if you decide venture capital is for you? How would you go about that thought process?
Well, I think you think about the milestones that you have to complete to be able to raise the next round, and give yourself a buffer, but look at the time you need to do that, and then raise the amount of money based on your cash burn during that period so that you can accomplish what you need to. Now, if you can raise a little more, that's good. If you can raise a little bit less, then focus on streamlining and find a way to use the funds that are available to get to your milestones.
Very good. So, Kathy, how should a tech founder pick a VC firm?
Well, I think, if you're in the place where you're going to raise VC money, the important thing is to realize that since this is the kind of money that should be propelling you to that, hockey stick, you should be thinking about, well, how can these people help me other than money? And some typical ways a VC might be able to help you. One is they have maybe some operating investors. So people who had been a CEO, had the founder, and had gone over the goal line, maybe in some industry that's relevant to you, or at least have some capabilities. Maybe they're really great at sales and can help you scale. Maybe they're great at hiring certain type of people. So you should always be looking to see what additional bonus kind of benefits do I get out of working with this group, and always be thinking about it as these are your partners, because they're coming in, they're getting a piece of your business, but they're putting in their money and taking the risk with you. So are these people you can get into the boat with? And that's very important.
Very good. All right, Deane, you've got experience with this. After the raise, how does a CFO help the business owner?
Well, I think you want to focus on building relationships over time with the stakeholders, with the investors. So communicate regularly, have regular reports you send out. And if there's surprises, communicate early. Make sure that your key people hear it from you rather than someone else. Another one is to manage the cash carefully. Put a budget and a forecast process together where you can get feedback off of the monthly or quarterly results and make corrective changes. But most importantly, give the CEO and the investors confidence that you're managing the cash well and you can get to the point of completing the milestones. And then another idea is to extend the runway where you can. Lease fixed assets, which can often give an extension on the cash, and also consider venture debt on top of venture capital investing.
Very good. Amen to the cash planning comment. It's really what helps businesses of all sorts become strategic, not just the VC-backed ones. Kathy, let's talk a little bit about venture capital as an asset class from an investor's perspective.
Okay.
Why should an investor put his money in VC funds?
Sure. So let's understand what a VC fund looks like. VC fund is an illiquid asset. So for an investor who's like, well, this is a chunk of money I'm putting in there for a long term for the growth, you should be thinking about having your money tied up for 5 to 7 or even 10 years. But when the pop happens, usually it is, or at least the aim is, it's dramatic. So that is what a VC fund is aimed to do. There are also some tax benefits, and I don't want to try to play tax attorney or anything here, but so there's definitely because the government wanted to stimulate investment into innovation, and so if you're investing in a VC fund or generally some of these early stages companies, you have some tax benefit that allows you to get the tax gains, which can be quite a bit, and as long as you're investing, almost like real estate when you're rolling into the exchange. That's another benefit of VC investing.
Very good. And what's the advantage of DeepWorks as an investment target, since you're doing a raise right now?
Well, so at DeepWork, if I compare ourselves to the VC funds, one is I mentioned before that amongst the partnership, there's a lot of operating investors. So we have a lot of operating operating experience, which allowed us to help our portfolio companies and boost their performance. But partially is also our ability to be very tech and science savvy. Because a lot of times you're dealing with investors who tend to be financial people, which is very important. But at the very early stages, sometimes even just getting over understanding the product and what is the what it is a part of a challenge that some of the early stage investors would have. And DeepWork is very good at that. We consider ourselves a deep tech, hard tech capable fund. And
is there a minimum investment for this third round?
Yeah. In general, people would ask for a certain, so $500,000 is the third investment, third fund 3 investment, and it is called over multiple calls. That's a typical VC kind of investment criteria.
Very good. Deane, anything to add about VC as an asset class for investors?
I've worked with VCs in a couple of companies, and they're among the smartest and the most interesting folks to work with. They often bring different perspectives that you wouldn't think of, and they often have reach to other resources that you wouldn't get access to otherwise, and so that can be really helpful to a business.
Very good. So, Kathy, knowing your stand-up comedy background, I did write a joke in honor of you being on our show.
Oh.
Are you ready to hear it?
I'm so ready to hear it. Phil, please tell us the joke.
And Deane, remind me next time we should invest in a laugh track for these shows. Got to talk to our partners about that. Of a CFO and a VC walk into a bar. There's music playing, so the CFO asks the VC if she'd like to dance. The VC says, only if I get my 4-drink liquidation preference first.
Very, very good.
Anyway, we always end our show with a 1-sentence key takeaway from the three of us. Deane, what's yours?
Focus on the cash burn while completing the milestones.
Mine would be good traction attracts more capital, even better than a great pitch deck. And Kathy, take us home.
I will say it's all about people, and that's not just VC picking the investors, the entrepreneurs, but also the entrepreneur picking the VCs.
Very good. Well, thanks. You guys are awesome. Next week, Deane and I are back on a show called People Lead the Profits. So stay tuned. Y'all have a great week. Bye, everybody.
Bye.
Bye.